welcome to our January 2024 edition of GlobalView. New year, new start. We're very excited to be having this conversation today. For those of you who are new to FrontierView, we're part of FiscalNote's Global Intelligence Business Unit. At FrontierView, we work as a trusted partner with over 300 multinationals, supporting senior executives such as VPs of region, CFOs, and strategy leads. Our focus is on powering strategic planning, market monitoring, and international growth. And for that, we have dedicated practices for North America, LATAM, Europe, Middle East, and Africa, APAC, global economics, and healthcare. We work with clients across consumer goods, healthcare, B2B, and tech sectors. And today we'll talk about something which has a little bit of a longer time horizon and is really looking at investment opportunities around the world. And in particular, we have a special focus on India, one of the star economic performers globally in 2023 and possibly 24 as well. And the best person to share her perspectives with us on this is Kinnari Gurnani, who's joining me today. She's Associate Practice Leader for South Asia here at FrontierView. Kinnari, welcome. Very excited to be talking to you about India. I think the numbers speak for themselves. Substantial growth, one of the fastest growing major markets globally in 2023, looking at really strong outlook for 24 as well. What are the main reasons why India is attracting attention, though? Is it just about growth, or is there anything else that is getting executives excited about the market?
Yeah, sure. Thanks for having me here, Martina. Yeah, definitely one of the markets that we talk about a lot more now than maybe we have in some years past. Big reason about it is growth. Just to maybe throw some numbers out there, we've seen several consecutive quarters now of upside surprises to growth. So we are talking about over 6% year-over-year growth, for example, over the last 3 quarters. Expectations of close to 7% year-over-year growth in 2023 and 2024. When you show big flashy numbers like that, people do get excited. Of course, India here in good company as well with some of the other high performers in the Asia Pacific region when you're looking at 2015 to 2019 and moving forward over the next 3 years or so as well, some pretty strong growth numbers. Aside from that, we don't want to ignore the fact that it is a really large market with very positive market sentiment, overall consumer sentiment, etc. You also have general positive upward income mobility in the market as well. That, of course, gets our B2C companies excited, and they are placing large bets on the market. On the B2B side, you do have lots of public investment in infrastructure projects. And so B2B companies are looking forward to capitalizing on that growth too. Aside from these 2 elements, of course, you do have the added third part of the story, which is supportive government policy. And of course, we will certainly be talking about that a lot more as well. But you do have the government wanting to become more business friendly in its policies, want to propagate manufacturing investment domestically. And so all of this is coming together in a positive concoction here. We also ran a poll recently of Asia Pacific executives asking them, which is that market outside of China where you think you will see the greatest potential to drive revenue growth. And India there came up again right on top. So corroborated there across anecdotal evidence, some of these good headline numbers that we're seeing, and some of the more polling type of questions that we've asked around as well. And so, all of them pointing certainly to that one direction.
Mm-hmm. Yeah, and I would add that last year, in 2023, China, of course, was a source of a lot of hope and a lot of disappointment for a lot of companies.
Yep.
And so in the hunt for growth, India really stood out in a number of different ways for the reasons that you're saying. It's also been coming up in conversation in relation to manufacturing decoupling, restructuring of supply chains, de-risking, however you call it. India is on that list of countries that companies are investigating as an alternative manufacturing hub. How do you see that evolving? What kind of role can India really play in terms of manufacturing diversification?
Yeah, absolutely. So India is absolutely trying to position itself as one of those top attractive contenders, as you're saying, because of several different reasons. Many of them are often externally determined, that now companies are starting to rethink their supply chains as well. And India has come up time and time again in a lot of these different conversations. I know we're flashing some numbers here on the slide right now, which is large number like $28 billion that the government has promised to spend across a whole bunch of different sectors over the next, let's say, 5 to 6 years or so. And so, a lot of that focus there from the government to want to capitalize on, again, this pivotal moment, I guess, in broader, in global geopolitics, in companies' own boardrooms, as well as they are reconsidering and thinking about these supply chains as well. There are a few of these sectors that maybe we would point to over some of the others that we believe are going to win out within India. And so, we have a big laundry list here. We don't want to project it as if, India is really the solution here to a lot of the different sectors and the different types of companies that are looking to restructure their supply chains. But certainly, based on some evidence right now, we are looking at the electronics sector, automotive, pharmaceuticals, and certainly food processing as well, are these four sectors that we would say are most likely to see the maximum amount of gains, again, over the medium term, as a result of some of this push by the government and a whole bunch of corporate interests that we've seen come into the market as well.
So, I mean, I think the economic case is pretty clear. The policy case is clear also with some of the incentives. But we also talked to a lot of executives who feel that, they've tried to invest big in India in the past and they've been burned in different ways. And so there's a certain amount of hesitation, or I guess painful prior experience that comes into this picture as well. What can I say to that, Kinnari, in terms of should companies think about this moment as kind of different, fundamentally different from maybe previous periods of time? Are the risks a little bit different today, or are there still likely to be challenges in making and kind of realizing some of the investment returns on some of these opportunities?
Yeah, absolutely. This is again, I guess, the other side to the same coin, right? In the same breath, almost, we discuss the opportunities, and then we get some of this hesitation from companies or questions about, wanting to make sure that they are not putting on a misplaced bet. So India has, in general, always been a large market with fairly high growth, when you're comparing it to some of the other developed markets as well. So some of those are still common factors. Here, though, there are some big differences. So point number one is this has now become a sustained period of high growth. That would be point number one, where previously there was a little bit more of that volatility, a little bit more of that unpredictability from either an economic performance or also from a policy point of view. That actually brings me to the second and probably the most important point, which is India still remains a tough market to do your business in or to operate in. You have it's a messy democracy. You have a whole bunch of different regulations as well. But the broader point here is companies are also starting to recognize the fact that there are very concerted efforts being made, not just at the central government level to, of course, become a little bit more business friendly in their overall approach, but also several state governments, where there's almost this nice, competitive federalism theme that has now started to come up, where there are many, many different state governments that have started to propagate their own, industrial policies, their own business policies, starting to, conduct certain bilateral negotiations with very, very large MNCs to try to draw in a lot of that international investment as well. So I guess that would be our response here, which is, absolutely, we have heard of these very large, very sophisticated and successful companies having, had some trouble with operating in India before. It certainly continues to remain a tough market to operate in general. But when we are looking at that comparison, when we are looking at, the active effort by at the central and several state governments to try to clarify a whole bunch of those different policies and regulations that they have recognized are not used to not be business friendly. Absolutely that would be our response to these companies, to recognize that and to capitalize on the fact that there are then, on the other hand, a lot of these incentives, a lot of these policies that are moving more towards wanting to capitalize and wanting to invite that foreign investment. So that would be the response to them.
Thank you very much, Kinry. I think there's a lot more to uncover in this conversation, but unfortunately we're out of time. So thank you, Kinry, for joining us with your insights today. I think India will continue to be top of the agenda for a lot of companies into 2024 with the challenges and the opportunities that the market presents. Thank you for those of you who listened to us, and we look forward to seeing you again with next month's edition of GlobalView.